Hello and welcome to SCN Corporate Connect. I'm Jane King at the NASDAQ market site in Times Square. And with me today, Don Steinbrugge, the CEO of Agecroft Partners. So welcome. Always great to have you in and learn about the latest things going on in the hedge fund industry. So here we are, beginning of 2018, and you're out with your predictions, which you do every year. So the first one, hedge fund industry assets to reach all-time high this year for the 10th year in a row.
Yeah, and that's surprising to a lot of people because if you read newspapers,
right,
all there are negative articles about the hedge fund industry.
Hedge funds are kind of on their way out, but
yeah, so most people would think the industry is bleeding, but 9 years in a row, they've reached an all-time high. Last year, they were up every single quarter. There's no reason they're not going to be up again in 2018. The performance last year, depending on what index you look at, was somewhere between 8 and 10%.
Okay.
Hedge fund investors are very happy with performance, significantly outperformed the bond market. I think you're going to see some positive flows in 2018.
Okay, so large rotation of assets based on changes in strategy preferences and relative performance of individual managers.
Yeah, so basically, although the assets have consistently gone up over the past 9 years, it's a very Darwinistic industry. You know, you have to generate good returns, and there's going to be a lot of rotation of money leaving one manager going to another. Areas that are going to lose assets are going to be long-short equity.
Okay.
A lot of long-short equity managers have underperformed the S&P 500. The underperforming managers are going to lose assets. Some of those will stay in long-short equity, but a lot is going to rotate into other strategies. Another strategy that's going to lose assets is strategies with a lot of fixed income beta in it.
Okay.
A lot of people are worried interest rates are going to rise, spreads are going to rise. That's going to hurt fixed income returns.
Okay.
So strategies that are going to gain assets, one's going to be Asia.
Okay.
You know, long-short equity Asia, a lot of people are beginning to look at. IMF says that 2/3 of world economic growth are coming from Asia. Asia has a lot higher volatility than the U.S. It's a retail-dominated marketplace. The valuations are a lot lower than the U.S., and only 4% of hedge fund assets are focused over on Asia.
Okay.
U.S. managers underperform the S&P 500. Asia, they have crushed their local indices. So you're beginning to see a lot of interest over there.
Okay.
Reinsurance has seen a lot of industry. We've had all these earthquakes in Mexico, hurricanes in the U.S.,
Most expensive
fires.
year for weather disasters.
It is, in the history of reinsurance.
Last year, yeah.
So a lot of people think that the pricing of reinsurance is going to go up. It's attracting a lot of institutional investors, low correlation to the equity and fixed income marketplace. Quant strategies are seeing a lot of demand. 7 of the 11 largest hedge fund managers are now quant managers. And another strategy you can see a lot of demand is trading-oriented fixed income strategies. So all these investment banks have been forced to close down their prop desks. Hedge funds are replacing those, and those that are generating a return through high turnover, buying securities low, selling them high, are going to see asset flows.
Okay, you did that all by memory, by the way. That was pretty amazing.
Thank you.
And then an arms race for alpha. That's another trend?
You got everybody who's watching, CNBC and Bloomberg television. Everybody's trying to get an information advantage on companies, and information advantage disappears very, very quickly.
Sure.
So all these strategies, that worked well 10 years ago, if they're not reinvesting in their investment process, they may stop adding alpha or generating strong performance. So there's this arms race. People are looking at alternative data sets. They're looking at, keywords in Google or what words are being used in social media. They're looking at satellite imagery. For example, how many cars are in the parking lot of this retail company, and how is that changing over time? They want information quicker than what people can get, based on fundamental analysis.
And it sounds like using a lot of technology too to get this information, artificial intelligence and.
If you're not staying on top of technology, you're going to have a difficult time competing. The days of going and visiting malls and seeing what consumers are buying are over. You have to have information much quicker.
Okay. Increase in hedge funds shutting down.
Well, even though the industry is reaching an all-time high in assets, it's oversaturated. There are 15,000 hedge funds, 90% of them aren't very good. So you're going to see both very prominent managers close down and a lot of small managers. On the prominent side, some of them haven't reinvested in their strategy, and they generated great numbers 10 years ago, but the past 3 they've done terrible.
Not working anymore. Yeah, that's tough, yeah.
On the small side, they're getting squeezed on both sides. Fees are coming down with hedge funds. In addition to that, expenses are increasing. They're being increase in regulation or having hiring compliance people, lawyers to work at their firm. And if you don't have at least 100 million under management, you're probably not making a profit for a hedge fund. Most hedge funds have less than 100 million. Only 2% of assets are flowing to these small managers. So you're going to see more small managers just unable to compete and close.
Yeah. And pension funds evolving, how they use hedge funds.
Yeah, so 10 years ago, pension funds looked at hedge funds as a separate asset class that wasn't correlated to the fixed income bond market, and they had a tailored benchmark for the various hedge funds that they invest in. And pension funds have moved beyond that. A lot of them are beginning to look at hedge fund managers as best in breed. So if it's a long-short equity manager, they'll put it alongside their equity managers, and they'll have a equity-oriented index associated with it. If it's a fixed income-oriented manager, they'll put it in their fixed income bucket. If it's an absolute return or uncorrelated strategy, they have a separate bucket for that with a separate index. And I think this is very positive because hedge funds are really just a fund structure made up of all these different strategies, and each strategy should have its own tailored benchmark. You shouldn't use the same indice across all hedge funds.
Got it. Okay. And growth of global hedge fund distribution. What do you mean by that exactly?
Well, what I mean is, if you're selling a hedge fund, it's kind of complicated because every country has their own regulations, and you have to register, and most people don't understand what they are. So most people are just marketing to their local region. So if you're a U.S. manager, you stick to the U.S. But the U.S. is highly competitive. As I mentioned, there's 15,000 hedge funds. People are getting contacted by thousands of them a year who are professional hedge fund investors. They may do second meetings with 50. They may hire 2 hedge funds a year. So recently, some law firms have come out with products that basically give you information on what you need to do to be able to sell in various countries around the world. They've made it much more easy for hedge fund managers to understand what they have to do and how to do that regulatory process. As a result of that, you're going to see hedge funds begin to market globally or hire third-party marketers to help them in specific countries around the world.
Okay, so cryptocurrency, so hot area in 2017. Do you think that will also be part of the hedge fund world in 2018?
Yeah, so 2 things about cryptocurrency. First of all, long term, we are extremely bullish. It's a phenomenal technology. Cryptocurrency, blockchain technology, it's going to evolve significantly over the next 10 years. We think there's going to be exponential growth. Right now, we think some of the cryptocurrencies are trading at very high valuations, and we think people need to be very careful at this entry point. On the hedge fund side, you now have about 150 hedge funds that are focusing either on blockchain technology or cryptocurrency. The main hedge fund index just added a cryptocurrency and blockchain index, which gives it a lot of credibility. I think the number focused on it is going to increase by 200 to 300% over the next year. We got $3 billion of hedge fund assets directed to that. That's going to increase. And I think over time, you'll see other hedge funds begin to allocate to the industry as a portion of their portfolio. So it is going to grow long term.
Yeah, and that seems bullish for cryptocurrencies if there's more investors kind of coming into that space.
It is. And the interesting thing about cryptocurrency is, Bitcoin is trading at a very high valuation. And it's really not supported by an interest rate or an earnings. It's all based on supply and demand. And part of that supply and demand is that there's a limited number of Bitcoins that can be issued. The problem is you have all these other cryptocurrencies that are coming out in the marketplace, which is increasing the supply. So the way to really add value, I don't necessarily think is buying Bitcoin, but focusing on these other competitors in the marketplace that are going to grow over time that have some technological advantage over Bitcoin or playing some of the service providers to the industry.
And then finally, increase in outsourcing.
Yeah, but basically, hedge funds, there's a lot of different things you need to do to run a hedge fund organization. And over the past 10 years, you've had all these service providers that have really significantly enhanced their offering. So I think you're just going to see a lot of these hedge funds reduce their staff, and farm out stuff like legal, compliance, IT, marketing, and so forth. So a big trend is less employees at hedge funds, more at service providers over time.
Could be bullish for law firms and things like that, looking for some new business, maybe, but that's another area. Okay, thank you, Don, for joining us. It would be great to have you back in 6 months and kind of update these.
Hey, it's my pleasure. I'd be happy to.
Changed. So great to have you with us. Don Steinbrugge, the CEO of Agecroft Partners, and I'm Jane King at the NASDAQ Market Site. Have a great day.